to Market Mastery. These are 5 steps to capture and keep market generated wealth. And we are about to get started. So, if you have any last minute things to wrap up here, get them done because I'm ready to go. And I'm so excited to teach you in this workshop today. Uh, I'm glad you're here and I'm proud of you for showing up today. Before we get started, just 2 quick housekeeping items. Number one is at the end, I'm going to go over questions and answers, but as you come up with questions, feel free to type them in the chat. I have made a note to myself in a couple places to kind of stop and check that out. So happy to pick up some questions when they come. I'm also going to answer a few of the commonly, asked questions and so forth. I also know that if you're anything like me, you've got like 14 tabs open on your computer now, and I probably had more than 14 when I started today. So if you could close out of your tabs, get a pen and paper or whatever, even a text pad on your computer. And, bonus points if you also go grab something cozy to drink, because you're going to learn so much good stuff. You're definitely going to want to take advantage of being here, giving yourself this time. And you want to stick around all the way through to the end of the free workshop, because later I'm going to show you how you can get some incredible bonuses, as well as, a few different systems that are all ready to produce alpha for you. And you get that just for staying till the end. So in a minute, I'm going to ask you about yourself. I'm going to ask you to say a little bit about yourself in the chat. And I'd like to know what brought you here tonight, and especially what you're hoping to get out of it, because I cater these things exactly to the audience, and I want to give you what it is that you feel you want. So, go ahead and come up with a little introduction about yourself. That would be great. Again, if you answer or participate in the chat, you'll be eligible for the super bonus tonight. While you're thinking about those things or what you're going to say and so forth, I'll tell you a little bit about me. I'm Guy Robert Porter. I have a degree in philosophy and neurobiology. I've been a chiropractor and an acupuncturist and a professor. And in finance, I'm the executive officer at Porter Kickham. We manage about $45 million there. I'm also the portfolio manager at the Engineered Risk Advisory and Lifestream Family Advisory, where we do some intergenerational wealth planning. Some of my favorite time is spent with the Lifestream Family Advisor, where we help ambitious business owners make their wealth grow both inside and outside of the market. So some of our clients are real estate speculators, farmers, artists, contractors, and all these people rely on what we do at the advisory and what we're going to be teaching in the market mastery class. These people rely on us to get them the returns that the market gives them so that they can live their own best life. So again, go ahead and, oh, hi, Doug, Wisconsin. Very good. I have some friends out there. Yeah. So again, be sure to let me know what it is that brings you here and what you'd want from tonight, because I'll try and give it to you. My own financial experience began when I lost a bunch of money I didn't have. It was student loan money. It was invested in options, and it was during the 1987 crash. So last year, the market fell by about 25 or 30%. But in 1987, the market fell by 25% in a day, in one day. And I just loved that experience so much that I kept coming back for more. Eventually, I've won trading contests. I spent time actually trading on the floor of the CBOT. Funny story there. And really, I've spent a lot of time losing money. Fortunately, I had a high-paying career to replace my losses, but more importantly, I got better at what I was doing, even though that took decades. The perseverance was important, and certainly having the the capital to back it up was important as well. Let me see. A lot of things bring people to these classes, and I'm wondering if these are not some of the mistakes or complaints that you have about your very own trading. They're incredibly common. And as much as you might wish that Google or even Chat GPT had the answer to how to get yourself out of these things, the fact is that it's very hard to find that out. So what I do with my work with Lumi Wealth and with my company Market Candy is this. I want to be the person that I wish I had had at this stage of my trading career, so that I wouldn't have had to go through all of the suffering and so forth that I did. And I really want to make this a great experience for you, and I want to make sure that you're able to get what you want out of the markets, because you deserve them. So you're in the right place today if you want to keep the money that you make in the market. It's very easy to make money in the market. It's very hard to keep money in the market. So I want to show you how to grow your wealth at an accelerated pace and how to protect the wealth you acquire so it doesn't speed in and out of your trading account. Now, you've probably tried to launch an algo or do some trading on your own if you've come, through the Lumi Wealth path here. And it's possible that you've been a little beat up of late. You may have been hit by volatility, a string of market losses. You might just be feeling like, you need some help. You would like your trading to be a lot safer. Well, you're in the right place if that's what you want. If you think that maybe you're doing something wrong because of these losses, and look, I'm laughing because I've been there. We're all going to experience these kinds of losses as we move through the course, and you have to be able to laugh. You're also in the right place if you are a relative beginner. If you would like to get more certainty before you dive in, if you want to make sure that you're doing the right thing before you get started, this is a very wise decision on your part, and it will easily save you 6 figures or more over the course of your lifetime if you're able to do this. So good job if you're a youngster or a relative newbie. You're in the right place if you seriously hate overpaying on federal and state income taxes. I know I do. Every one of my clients has a complaint about it. You cannot get away from paying taxes, but so many people are paying what I would call optional taxes because they don't know how to do the right thing with their trading. And as a result, their business partner is Uncle Sam. So look, you're not in the right place if you want to get rich quick, if you want to do one of those things where you turn $5,000 into $2 million in 1 year. I am not the right guy for you. By the same token, if you think that if you just spend money on a course and you exert zero effort, that you'll get rich, it does not work here. It really doesn't work anywhere. So this isn't the place for you if that's what's up. If you blame everyone and everything when you get bad results, but you take the credit when you get good results, well, that's the kind of thinking that I am more than willing to virtually slap out of your head, because that's not what successful people do. It's the opposite of what successful people do. They take responsibility. In our classes, we work very closely with each other. We share a lot of stuff, so there's no room for hypercritical people, Monday morning quarterbacks, anything like that. That's just not allowed. We're looking for people who are committed and coachable. And when we start the course, and periodically throughout the course and even tonight, I always give people a choice about which level of communication they would like from me. I have a wide range. all the way up to unfiltered. And in the course that's going to start in May, we have a Marine. So he always prefers to be yelled at as if I were a drill sergeant. I am happy to oblige, and sometimes it's pretty funny. So I'm also more than willing to be your Mr. Rogers. So that's great. Emmanuel, where in New Jersey, my friend? I grew up in New Jersey. I grew up in Morristown. All my neighbors looked like the Sopranos. So great to see you here. Good. All right. Now listen, we're all very Jersey City, fantastic. I took a lot of karate classes there. Um, very nice. Uh, I'd like to share some bad news. Um, as you know, I'm an investment advisor, but I'm not acting as an investment advisor tonight or during the course at all. Um, it is my duty, though, to let you know. Come on, Mr. Computer. There we go. It is my duty to let you know that trading is very dangerous. It's supposed to be risky. There are volumes and volumes of books, articles that will tell you that what we're trying to do is actually impossible to do. By the same token, there are some very highly paid people in New York, LA, Chicago who are actually doing it. I just need you to know that your success is not guaranteed, but some losses are guaranteed. You will not get out of this unscathed. So, good, we said that it was impossible. Here's the really bad news: 90% of futures accounts blow up in 90 days. So, if you have ever blown up an account, um, type yes in the chat. Let me know. Congratulations. And if you've been trading for any amount of time and you have not blown up an account, maybe you're not trying hard enough. I don't know what it is, but I've certainly gone through plenty of them. I'm going to have some risk disclosures at the somewhere in here. They're from Interactive Brokers, and they're important to read. Let's see. Doug, you want to do some work with options. There's an entire option disclosure for you to for you guys are cracking me up. There's an entire set of risk disclosures for you to go through on that score. Mauricio, I'm so sorry. I'm sure I just screwed up your name, but congratulations to you for continuing in spite of the adversity you're undoubtedly working with. I mean, this is just how it is, guys. We have to slog through it. The average investor, his lifetime return is 4.9% per year. That's from the Dalbar study. It's no wonder that there's a retirement crisis in the country. We know inflation has exceeded that the last couple of years and may exceed it for the near future. So you have a bunch of people who are making zero money on their money, and they're going to count on this for their financial independence. Okay. Now, most managers, most professionals, the guys who run mutual funds, okay, they don't beat their benchmark consistently. They're unable to do it. So I want you to know, and probably you already do, that trading is hard. And what we're going to engage in is some real work that's going to turn that around for you and give you, more of the results that you're looking for. I also want to talk about something called an asymmetrical market, or a market with asymmetrical information. This is something that I don't think a lot of people consider. And maybe if you have your fingers near the keyboard, give me a yes or no. But have you ever thought about who is on the other side of your trade? Like, you do your analysis, you decide that you're going to buy this stock, and you do, and it's going to go up. Have you ever wondered what idiot sold you something that's going to be worth more in the near future? Who would want to take the other side of your trade? So and I don't know any of you guys. Don't be insulted. This is just the way I talk. But if you're at a poker game and you don't know who the sucker is, it's you. So it's going to be important, and we will examine this in detail to know who are the likely people on the other side of the trade and actually what they're thinking. So just tremendously important. I see you guys have put some thought into it, so I'm happy to hear that. A lot of traders are ignorant of their own cognitive and behavioral biases. We'll work on that a little bit. And many people are unaware of the quote unquote secrets of the rich. And here's what I mean by that. There are a lot of ways to shelter income, and I don't mean hide it, I don't mean anything illegal. There are a lot of ways to make it so that your money is tax deferred, not taxed while it's growing, just on and on. But very few people know what they are. And the reason is that you usually don't hear about this until you already have a bunch of money. That's when the elite advisors come out of the woodwork, the super life insurance salesman, whatever. They're not really secrets. It's just, on a need to know basis, you don't generally talk about this with somebody who doesn't have a bunch of money. The other advantage that your opponents have are certain tools and privileges that I'm going to clue you into. And these, again, simply are things that most people don't read about, most people don't know about. I'll give you an example. There's something called portfolio margin, which allows you to write naked short calls if you want to. These can be, of course, they're supposed to be incredibly dangerous, right? Because a stock can go to infinity, which it never has. But they're supposed to be very dangerous. Yet you can do that if you have enough money in your account and you know the right questions to ask your broker. So here is just the last bit of bad news before we get on to the workshop. The folks who built this thing and the people who do this for a living and the scientists who do this kind of stuff, well, like you, they have all realized that there's a lot of money in the stock market. It's infinitely scalable, and all these guys are willing and eager to trade with you. So here you are at the market open, filled with perhaps some doubt, thinking about past failures and mistakes, thinking about the people who depend on you. There is a real lot of pressure. And in order to have that not be stressful for you, there are a few things that you can start to do for yourself. And this is probably one of the most important slides in the whole slide deck. These are some of the questions that you really need to be asking yourself. So just take a second while I actually find where I am in my notes, and we'll go from there. Okay, so got a little ahead of myself. I am quite a fan of the underdog. Even though there's all these brilliant people out here who are working in the market every day, I got to say that there are a lot of people who are quite ordinary who do pretty well in the stock market. So I've worked with some of these quant hedge funds. My job was to listen to the ramblings of a PhD in math, tell me about his work and the results and the trades. And then before they actually gave him money, I was the guy who asked him the hard questions like, hey, when you sell all those puts, what happens if you wake up one morning and there are thousands of shares in your account and you have a huge margin call? What are you going to do then? Now, I don't know if you guys know this or not, but this actually happened to a kid in New Jersey who killed himself over it. So these kinds of questions, these kinds of preparatory things are very important before you get in there and actually trade or actually scale up and, trade big. Some of the ways into this trading are through quant jobs. I don't know if any of you guys are programmers or computer scientists or statisticians, but these quant jobs pay a lot of money. The competition is fierce. Supposedly there are courses that'll prepare you for the exam and so forth, but a lot of guys want to work at a place like Renaissance Technologies. I hope you've heard of that. They're legendary. They make a jaw-dropping return every year, every quarter. We're not going to do that here. We're not going to be a Renaissance Technology. What we are training for and putting together here is less intense, and frankly, it's less effective than Renaissance. We're not going to become billionaires, but we aim to be very comfortable and profitable. So I would call it more of a casual Renaissance. And what we're looking to do is to create the opportunity for you guys to function as a team or as an individual and get a return that works for you. We have people in the class who want a 300% return and other people who want a safe 12% return. If you guys have ever thought of the kind of returns that you're looking for, if you type those into the chat, it'll be very interesting to find out what people want. More is definitely not necessarily better, but I'd be interested to know what you think it is that you'd like. In the class, I cater the class to the people who show up. So we've got a Marine and a cattle rancher who trades the S&P 500 futures with very tight stops. He hops in and out 5, 10, even 15 times a day. We've got a computer geek, I say that lovingly, who's working on taking down both sides of the triple leverage market and Qs. And we have a very thoughtful, gentle guy who is making the most of some of the advantages that we've started in risk control and synthetic return enhancement, and that has to do with options. And I know, Doug, you've probably started to run into something like that. So as you can see, I just love what I do. I love helping you learn about this stuff because I truly believe it's our right and it's an honor that we have in this country. You know, not every country has a stock exchange. Not every country lets you participate as freely as you can here. And hardly any countries have the safety and controls in finance that you'll find here. So truly, if you start investing and trading and you act prudently, there's no excuse for not having a significant fortune for retirement, financial independence, for your family, your causes, whatever. So that's my mission, both today and in general, is to teach you guys the basic foundations of market mastery so you can grow, protect, and scale your wealth without nail-biting drama, without gut-wrenching losses. I mean, I can remember how I felt the first time my whole portfolio dropped in value by 90% in the course of a day or a week. It's more than once. I don't ever want that for you, especially if there are people in your life who rely on you. So I got to tell you, though, that this happened before the internet, if any of you can imagine that. It was hard for us to go outside because of all the saber-toothed tigers and the dinosaurs. But anyway, resources were very hard to come by. Knowledgeable people were far away. They were hard to find. Now, today, it's almost the opposite. There's a lot of resources available, but they're very hard to trust. You don't know who to trust, but there's so many. So I want to take you through 5 steps today to set the foundation to protect yourself and to work hard for your family. So let me just check here in the chat if anybody's ventured a percentage. No brave people yet. Okay, so step number 1 is to learn about the mindset shift that you have to make when it comes to properly managing your risk so you can grow and grow your overall wealth. Because when you're the least bit unclear about risk, fear sets in. All sorts of your mental neurosis, that, what do they call it, internal dialogue, whatever, starts up when you're losing, and it really blocks your progress. Now, I'm not trying to say anything airy-fairy here about feelings or the success mindset, none of that. I'm talking about having a hard numerical grasp on the math of your risk, as well as a principled understanding of what you're risking, so you'll be nothing but confident. And a good grasp on the way your mind works is important because your mind tricks you into making stupid mistakes. See, it isn't necessarily your fault as it is your nature to make some of the mistakes that you've been making. it's like one of those diagrams where you see the two lines and they say, you know, which one is longer, which one's shorter. And of course, since you've seen this before, you guess, oh, they're equal. But no matter what you do, the one line is going to appear longer because you're built that way. And there are a bunch of biases you have when it comes to knowledge, when it comes to operating in the market, when it comes to what happens in adversity. There are a lot of these biases that you have that are very hard to see and very hard to get over. So that's really your first step. Your next step is to have an idea of what it is that you want to do. Yeah, I'm just looking here. 100%. Jeff, are you in crypto or stocks? Mauricio, 20%. Very nice. And Doug, you bring up an excellent point about lowering the cost basis of a stock. I do that every damn day. That's a great way to go about doing this thing. So look, the second thing you need to have is, we used to call it a system. Now, of course, because computers are so powerful and people are so much smarter, now it's an algo. So you need to have an idea about how it is you're going to want to make money. So Doug has been saying that he's using stocks and covered calls. Sorry for jumping around, guys. It's just I'm doing this on a laptop, not my desktop. So let me just talk about 5 or 6 different ways that you can make money in the stock market, or in crypto, or in futures. You can identify trends. Trends are supposed to be impossible to exist. They're an inefficiency in the market, and yet they're there all the time. So if you find one and you can make yourself go with it and not do any of the stupid stuff along the way, you can make a whole bunch of money. There's also mean reversion. That's really the opposite of a trend. That's when you think the price of something is too high, so you sell it. You think the price of something is too low, so you buy it, because you think that there is some type of mean that this price is going to revert to. I think that Bollinger Bands, if anybody knows what they are, Bollinger Bands are a way or one method of mean reversion. You can use information theory. And that's a way to mathematically view the market as almost a radio transmission, a time series of information. It's a very, very noisy communication. But if you can find the signal that's buried in the noise, then you can know the direction and confidently stay with whichever direction you need to. Now, I don't know if you guys took any of the AI courses that Lumi Wealth offers, but for a project for the AI course, you actually develop a program that reads Twitter feeds and can tell whether people are bullish or bearish on a particular stock. So that's a very advanced way to use sentiment. If you are a futures trader, large hedgers and large producers are actually required to state their positions at the end of each week. So you can judge the sentiment not on what somebody's saying, but where their money is. You can take a look and see where the big guys are as far as being long or short, and you can trade accordingly. If anybody out there is using technical analysis and you have maybe a favorite indicator or a favorite way of doing that analysis, go ahead and put that in the chat. I'd be interested in hearing what you're doing with it. There are whole Python libraries of technical analysis formula that very easily you can pop them right into your program. If you've done the work with Robert, then you've probably done this already and put it into LumiBot trading. Also, and a lot of people don't like this, but portfolio management, rebalancing of risk, and so forth can be a very effective way to build your wealth without, in fact, by actively decreasing risk. It's not a lot of day trading. There's not a lot of pushing of buttons and so forth. But if you do this correctly, then what happens is that you reduce risk and you experience the growth that's available in your portfolio. So step 3, and this is impossibly small to read, sorry, is the whole basis for my engineered risk advisory. We're going to show you how to titrate your exposure to the market down to the share level, if you like, and how to make adjustments to that exposure when the situation changes. So if you're using options, you may rely on the delta of these options plus the amount of shares of the underlying that you have to calculate exactly how much exposure you have to the movement of that stock. And if that sounds like a whole bunch of gibberish to you, I apologize, but I'll certainly show you how it's done. And what's interesting is that when your favorite stock takes a dive, you don't have to experience the whole dive. And let's imagine that you thought, and again, these are not recommendations, imagine that you thought Amazon was a good buy. Well, that's a very volatile stock. So if you had 100 shares of it at, let's say, 100, you could sell a way out of the money call, like a January 2025 140 call, for instance. Whenever Amazon takes a dive, you would only experience about a third to a half of that dive because your option would make up for it. And it makes you less likely to be nervous and less likely to, what can I say, do something stupid when you shouldn't. Okay, so options are great, especially if you use them in a mathematical way. You can lower your stress, you can increase your returns, and so forth. So in step 4, we'll start to go through some of the things that you can do to actually scale your programs, your systems, your portfolio. And scaling happens in a few different ways. Again, there's a bit of math to it, and it's worth the trouble it will take to learn this math, because if you have a portfolio of $100,000 and you're making your 20% on it like you'd like to, and maybe 25% some years, it's still going to take you a long time to get up to $1 million. But if you have a portfolio of $100,000 and you have put together the right things that you need to do, and you're making about 20% a year, literally $30 to $40 million will chase you around saying, please invest me. Please let me have some of this 20% stuff, because that is just a phenomenal rate of return. And people with a lot of money will pay you and compete with each other in order to have you manage their money at that level. Now, Jeff, in terms of crypto and your 100%, the 100% that you're looking for, most of the people that I know who are investing in crypto hedge funds kind of think of 100% as the benchmark. So 100% in crypto is kind of like the 12% in stocks. It's a lot, but you need to get paid a lot because there's a whole bunch of risk. So that's what happens when you scale. And again, you can use options to increase, instead of selling covered calls, you can actually buy calls along with your positions to increase your exposure during times when you think the stock will go up. And again, you can really titrate this very well so that you can have less risk and more return. And step 5 is basically what are the proper legal, financial, and tax structures that will create the most advantage for you. So if you're a business owner, you'll really want to hear about this because it applies to all sorts of businesses. But again, if you're at all successful in your endeavors, then Mauricio, your 20% is going to really rapidly get turned into about 14%. And Jeff, your crypto, your 100% is going to be a measly 70% once the government gets a hold of this, unless you do things, the right way. So let me just ask you to take a moment and think, how would your life change if you were more certain about how you traded and invested? What would it mean for your family's future? And especially think of the relief you would have. For many of you, trading is stressful. Losses are like taking a gut punch, as we've said before. What if that all went away? How much extra energy would you have? How much extra time would you have for your family? Okay, so you're probably wondering, where do I start? Sounds awesome. I don't know what to do. Well, listen, that's why I'm here. We're going to dive in and we're going to get ready. So we're going to make a mind shift change in a couple of different fronts when it comes to market mastery. First, as I said before, you're hardwired to fail at this because the social structure of the market and your own neural wiring produces bias and incorrect action. You can't run away from your bias. You can only work to neutralize it. You need to work on identifying a dopamine rush and an adrenaline rush, and realize that both of these neurohormonal reactions serve you when you're like in a farming culture 10,000 years ago. But in the market, they're worse than useless. They're harmful. So as you look at the chart, during the day, you've got a position on. If you're looking at the price tick by tick, if you're hypnotized by the flashing green and red stuff, then what's happening is you're almost an addict to the dopamine that you're getting when you see all this gamified stuff. And when the market moves in the wrong direction, and I know you've all felt this, you get that adrenaline rush, like, my God, I've got to do something. And the thing about it is, again, you're wired that when a bad thing happens and adrenaline starts pumping, you must do something. Okay, it would just be stupid if a saber-toothed tiger was charging at you and you decided to think about it for a while. That would just be dumb. So you're doing what you have evolved to do when you suddenly get out of that position. But it's not necessarily the right thing to do because the market is not set up like the jungle is. Okay, so virtually every big loss that you've suffered included one or two of the biases that are on this screen. And if you're starting out in algo trading, you may have seen that it promised to take the emotion out of trading, but you still have emotional reactions. You still feel stuff around these positions and so forth that your machine has put on, even though you're not the one punching the buttons. So examining this is something that we do continuously and in the group, and it really helps you to understand yourself. I don't want to get spiritual or whatever, but like your lower self, your body self versus your intellect versus, your plan. So it's important to be aware of this because anything can happen in the market. Sure, you've heard that before, but look, in 2008, an entire sector of the US economy had negative profit. Never had happened before. The entire financial XLF had a negative earnings. Now, not to be outdone, in 2020, the price of oil, that commodity, crude oil, was actually negative for 5 days. If you owned it, you owed money. Okay, it wasn't zero, it was negative. Now, I have a few clients who are farmers, and they told me at that time that producers were calling them and asking them if they had anywhere on their property where they could dump a tanker, that's 42,000 gallons of crude oil. These guys were looking around for places to just dump oil. It was ridiculous. So imagine just engaging in crude oil trading at that crazy time. and not having a handle on what was going on inside your mind, whether or not a computer was doing the trading for you. It's just incredibly important to have this balanced. So if you have this understanding and you're able to work with your mind and your math, you can protect yourself when things go wrong. The opposite of this, again, I'm guessing you've already seen it, and hopefully for you guys here, you have not sacrificed time, money, and even family with the ravages of this uncontrolled trading. It happens a lot, but there's a lot of guys who've been divorced over their trading habits. So very important to make sure that your partner is in line with this if you have one. And that's something that generally trading classes don't teach. But I have to tell you that in my vantage point as an advisor, it's one of the most important things. Okay. Just one last thing I want to mention. And if you guys have ever thought to yourself, I made a mistake, I walked away from the trade, I walked away from the screen and this bad thing happened, or gosh, I was sick that day and I couldn't trade. This is the biggest risk for single operators. It's called organizational risk. And it's one of the things that hedge funds and mutual funds really concentrating on eliminating. And it's something that you guys too will need to figure out, first of all, identify, and then, eliminate it. So one of the bonuses that I'll be giving at the end of this talk is a paper, an academic paper that details not one, not 10, but 101 different alpha factors, along with some rudimentary code that you can play with. So that is something that'll be interesting here. Again, I'm just going to the chat here. Okay, Jeff, you're using Chart Prime's indicators. Okay, I'm not familiar with Chart Prime, but I will say this, as I do to everyone in class. If something looks really cool on your screen, you need to know what the math is, what the system is behind it. If you rely on the color changing to make a trade, it will not serve you. You really need to know what kind of operations are happening that produce the bright colors that you're seeing on the screen. Okay, so it's math intensive in some instances, but we help you through every step of that. So this is step 2. It's your system. It's your minimally viable algorithm. It is what is driving your profit. You need to have clarity about it. You need to make sure it's consistent with the market rules and fundamentals. And you need to be able to explain it to someone else. That's been pretty hard for people that need to be able to explain your strategy to somebody else, because if you can't, then you're doing something very intuitive. And as soon as you go into, operating on intuition, you're at the mercy of all those biases that you can't even see. So, yeah, I'm sorry. So I've talked about scaling more than once. If you want to scale by using leverage in your own account, you can do that. But what's hard is that you get big ups and big downs. It's hard to arrange not impossible, it's hard to arrange your portfolio asymmetrically so you get more up than down. Okay. Another way to scale, though, is to do a good job and have other people want to invest with you. If you want to do that, then there are a bunch of a bunch of ways that people measure your progress. Again, these are a little math intensive, but will give you an intuitive understanding of what's going on. So something, for instance, like the Sharpe ratio, just ask the question, are you taking a lot of risk for the return you're getting, or are you taking a little risk for the return you're getting? Things like that. So we want to know how your system operates when the market goes down. Is that different from how it operates when the market goes up? And if you can get these asymmetries in there and get them correct, you'll make a lot of money. We've mentioned options and derivatives. There's a guy who's starting the class, and his objective is to have a portfolio of ETFs with various option overlays. That's going to be his chart. That's going to be his project, and that may be something that a couple of you guys can work with him on. Yeah. I am, again, just kind of lost in my slides here. Sorry. So we've talked about the various ways to scale your system. Now it's going to be important to actually maintain your success. So when you have this thing up and running, it's going to be important that not only does the system run well, but the whole rest of your life around this has to run well too. Because if it doesn't, it will start to interfere with the running of your program. Okay, if your health is bad, if your relationship's on the rocks, all these things are going to make it so that you can't trade well. Of course, you're not fixing these things up just for the sake of trading. I'm just telling you from a holistic point of view that it's important to have this, to have everything together, because everything affects everything else. So I want to talk about a little bit more what goes into this course. We examine some professional level algos. I will give you access to the same programs that hedge funds and dark pools use to disguise their activity, how they scale in and out of positions, execute grid strategy. You do not have to be a programmer to know this, although it's certainly a lot faster if you're using Python. But you can have access to all the things that the pros do, including, if you have an order large enough, including using a dark pool to handle some of your transactions if you like. I will fully disclose the momentum system that I use is visually based, very little math, just some things to understand about the market participants, and it tells you when to be in the market, when to be on the sidelines. It's something that if you're not a trader, if you kind of hold your nose when you think of the stock market, this is great because there's not a lot of involvement. This used to be something that we really concentrate on, the bear market option strategy, because when the market's crashing and you need money, you don't want to sell stock that you've taken a loss on, and options can really help you with that, as some of you know. But now we're changing this to simply a dividend enhancement option strategy. Same thing, we're using options. We're getting extra income from every stock we own, and we're making it so that we can have a lot of long-term gains for the big money, and have the little money just take place with short-term gains. We're going to do a lot of work on that bias framework. As you know, these things have been running you. They will continue to run you. And I value this at $10,000 a year. I don't really mean it, but look, when you think about the mistakes you've made in negotiations, the mistakes you've made when you've been buying a car, let alone the stuff in the stock market, so much of it is because of these biases you have. And if you can at least see them when they happen half the time, it'll really help you. The next thing is I call it option forward projection, but we use a few programs to take a look at all of the option data, and that helps us project future price moves with some pretty simple and direct formulas. So if you knew what the range of the S&P was going to be to an 80% certainty over the next 5 days, maybe you could make some money on that. I don't know. We'll talk about creative ways to do that once we have explored the method. If you do have a successful system, and I can see some of you do, then there is a way to scale it, double your return on investment in under a year. And certainly if you're making as little as $10,000 a year, doubling your return is worth that. If you're an advanced trader, if you are somebody who has their own business, then we do give access to the Elements app, the LifeStream virtual family office experience, and that has a value of $5,000. People actually pay $5,000 for that when I do it for them, so I'm not blowing any smoke here. The other thing about this course is that you can have a consult on demand. Okay, you can set a Zoom meeting with me, and as long as you will keep the appointment, not cancel 10 minutes before, as long as you'll keep the appointment and kind of organize yourself so that we're not just BSing, so that we're really working on a problem. This 10-week course can really rocket your results because we'll be looking at everything you do. We'll be looking at as trades to the level of certainty that we need to, and you'll get a lot out of that. So as I total this all up, it comes to a large sum, and it is a lot less than what Lumi Wealth is charging for this course. So as everything in life, it's less than what I'd like to get for it and more than what you want to pay for it. So I guess that's the whole thing of compromise. The only thing to do, though, is to sign up. And I do want to say that we're getting to the close of our session today. So since you guys have been great with participating, everybody who participated today will have access to that Elements app that, again, people pay a whole bunch of money for. Let me type in the chat my email address. Okay, so I think you can all see that. I need you participators to just drop me a quick note at that address and let me know that you would like the Elements app. What'll happen after that is that you'll get an invitation in a day or so, and you will get a guided onboarding experience. So what Elements does, it seems like it's like Mint. It seems like it's like Capital or whatever some of those apps are, but it's not. You put in that information, and instead of just tracking the information, Elements tracks for me certain ratios and so forth. And it makes it very easy, if you keep up with this stuff, makes it very easy for us to have a discussion about whether or not you're on track for where you said you wanted to be next year, 3 years from now, et cetera. And it will give you a really good idea of how you're doing with your trading, with your business, with your job. So each of these little blocks in Elements comes up with a quotient. Your trading account will probably be listed under savings somewhere in Elements. Once you start to become profitable, you'll withdraw money, and that will go into your income area. We will take a look at your tax rate and make sure you're not paying too much. We'll take a look at your estate status just to make sure that you're legally covered. And and you don't get into any trouble that way. And what everybody looks at is, I guess, everybody who's interested in being, having financial freedom, is something called the total term. And basically, it's this: if you know how much money you spend every year in order to support your lifestyle, we just figure out what it takes. If we liquidated everything, we figure out how many years that is. And that's what's called your total term. And some people retire when their total term is 10, some people at 20. I have some very hardworking individuals who have a total term of 150, which means they will never in their lives spend all their money. And they're free to actually think about what type of causes they would like to support, what they want to do, for their kids, for charity, etc. So anyway, that's what's in there. Let me also give you right now, if I can get to it, the link for the 101 alphas. So please bear with me. Again, I'm working on my laptop, and that is less than optimal. Okay, there's that. Okay, this is a link to the 101 alpha generating setups. And at this point, if you feel like, and I hope you do, if you feel like you really want to get going and make sure that you're doing the right thing for yourself and your family, then the way to do it is to go to LumiWealth.com. To go to the courses. Oh, look, they gave me top billing. To go to Market Mastery. And you'll be able to see some stuff about the course description. I have to tell you that some of this is a little bit old, and except for this, the course is highly customized. The people who show up, we're going to make this course all about you and what you want to do. So, be assured of that. This course curriculum, I can't guarantee that everything in it will be taught, but we do have everything that's in it. So if there's something that interests you, we will make sure that that's delivered. So there are 3 plans, as there are for everything in LumiWealth. There's the self-directed plan. Gotta say, I would not recommend it. There's the live classes. Those are great. This is the thing where I actually tailor it to your particular situation. You have the ability to have a Zoom conference with me and get this thing straight. For those of you who have your own business, who have portfolios of $500,000, $600,000, you might want to do something more personal and we'll say bespoke, so that you get the attention that you need to make sure that your whole tax situation, that your legal structures and so forth are all aligned. So by the time we're done with this, and it takes some people longer than others, by the time we're done with it, what we're looking for is an integrated framework where between you and the community and the class, or if you want to be a Lone Ranger, I guess it's up to you, but I've never really seen a Lone Ranger succeed in trading. Every good portfolio manager I know is talking to gobs of people all the time. They want to be involved with other guys who are trading so that they can get ideas, so that they're in touch with what their peers are thinking, not so much to follow the herd, but just to know. And trading, as you know, can be a very isolating task, especially if you're sitting in front of your computer all day. That's actually not good for you. So So it's good to have a team. It's good to figure out how to be a team player. I want to answer just a couple of frequently asked questions, and then I will let you guys run off. And certainly, if you have some questions, go ahead and type them in. Somebody asked if they should do this now or wait a little bit. And, seriously, my response is, what is going to change for you if you wait? I mean, have you been holding out on yourself? Do you have a hidden talent that now you're going to release? I just don't think so. But, more importantly, as I've mentioned before, my company, Market Candy, is looking for the top, 5 or 10% of people who really could be integral parts of a hedge fund. And when I find enough guys to do that, I will probably run off and do that instead of teaching these courses. So I don't know how much longer this will get taught. Not a threat or anything. I just don't want you to be disappointed if, 9 months from now, there's no way to take the course live. If you take the course, in the video thing, then you won't have it catered to you. One last thing, and I'm having a little trouble finding the chat again. I want to give you my. Oh, there we are. You got to press send. If you want people to see something, you got to press send. I'm also going to put in here my Calendly link. Now, again, I'm an actual investment advisor. So when I tell you that I charge $300, I can't lie about it. I really do charge that. You can see it in my ADV. And what I'm going to offer to each of you, if you would like, is an hour of my time, since you've given me your attention for this long. If you want to get your charts together, if you want to get your statements together, look over stuff, you really want to ask some questions about the stuff you think is standing in your way, let's just work on that for an hour and see if you can't get more clarity, see if something just doesn't become apparent to you, see if there's some way that I can remove an obstacle that's been holding you back. Sincerely, I would love to do that. The link is right there for you to use it. You guys know how to sign up for the course, I expect, and I am not seeing any questions show up in the chat. So I'm imagining that I've explained this thoroughly. So again, you all have a nice night. And, I also want to say this. There are a lot of people sitting around tonight drinking beer, watching a ball game, complaining about how they're not getting anywhere in life and things are unfair and so forth. But you guys are here doing something about it. You're really trying to take a step. So, hey, Robert, I'm sure that there will be a replay. I think Robert posts those, within a day or so. So, still take advantage of the bonuses. And yeah, you guys, you're really doing the thing. You're interested in it. You're really going out of your way. Hopefully you're not in that club that makes 4% a year for the rest of your life. I want to see good things for you and your family. So I'm committed to that. Again, just y'all take care, and I hope to see you sooner or later.